Let's look at Caterpillar. First off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. We will go here to one of the bonus themes, and this one is called vehicles. And Caterpillar is, into heavy machinery, 133-ish% here from the low, and pretty close here to the highs. The thing is that, when I go through the items on the watch lists, I have to, call it as I see it. And as of late, there are a bunch of these bear alarm signals. So this is Caterpillar. They are a very famous company. They have, a very broad range of, heavy industry vehicles. So they don't need a whole lot of introduction. I mean, you have probably seen them all over the place. So here you can see some of them, a bit, so some small images, but yeah. Let's jump into the charts. So Caterpillar has seen a very substantial rally due to this whole, infrastructure spending that Biden has proposed. The thing is that there's a saying in the market, buy the rumor, sell the news, and it certainly seems like if you look at this rally, this very very sharp hockey stick rally, that investors have bought into that thesis. So that has likely to a very significant degree played itself out. If we look here at these time cycles. So even when we go here way back to 1996, you see this major rise, decline time cycle, rise, decline, and within which you tend to have three small. 1, 2, 3. Here, major time cycle, 1, 2, 3. Major time cycle, and then you have 1 and a 2 and a 3. So based on the current time cycles, we do expect to see lower prices as we go here towards the later part of this year and early next year. So here you have the last 20 years of a seasonality for Caterpillar. And something we do see is that April, it tends to be a strong-ish month, but May is literally the weakest month. There usually is a -2% loss, and it closes lower 60% of the time. So the odds favor the bears, and you can see here that June, July, and August are mediocre. Hence, basically, based on this very real data about prior price action, the current period we are in here, it's rather mediocre for Caterpillar. So this goes into August, and if you look here at the time cycle, so here we are approaching July, August, and that is a time where the declining part of the time cycle really starts to accelerate. So that is interesting. Okay, so you have that. So here we are looking at some prior times where we had high readings on the PPO and the RSI. So here you can see that this in this circle, this is the current RSI and the weekly PPO, and this of course is the current price. You see that in this instance we had a higher RSI, PPO that was slightly above the current level, and that led to one of the more substantial pullbacks in Caterpillar. Before that pullback, we had this hockey stick rally. In this instance, high RSI, similar RSI to now, and we got a substantial pullback. Here we have a combination like now, where we have high RSI and high PPO. Then we did actually correct down to, even down here to the red 200-week moving average. So a very substantial mean reversion. Here, high RSI. For initially we got a pullback, and then a way more substantial correction below all the moving averages. This was during the global financial crisis. Here we have, and this is back, in 2006, we have high PPO and high RSI. and then a pullback to the blue 100-week moving average. So basically, the current situation we have here technically with Caterpillar is one of excess. So this is high risk for the bulls. And Caterpillar, it is known, I mean, as we have seen, this is not the first time it's had one of those hockey stick rallies. Like here it had it, and we know how that turned out. Here it had it, and this is how it played out. So this is just how Caterpillar has traded for a long time. Here we compare the previous times where we had these hockey stick rallies for Caterpillar. So current rally is 167% over 434 days. Here 203% over 714 days. So we did spend more time to make this, significantly more time. But you see here that the percentage move, it's rather similar. When we look here at this, this was from the bottom of the global financial crisis. We do certainly have a much bigger percentage move, but that also comes from a lower level. And that is just how the math works out, and this is also one of the reasons why, buy low can generate a lot of alpha. But anyway, you see that, the duration was in line with what we saw here. It is, of course, fully possible due to the prior durations of the rally, the major hockey stick rallies, that there could be more left in the current one. So that is one of the possibilities. So even though so far there is evidence favoring a more bearish tactic, we need to be a bit careful as well. Looking here at the daily data points, looking here at the PPO, measures the distance from the 200-day moving average, and also the RSI, we do have high readings. This level that we recently did visit did mark the high of the prior hockey stick rally. When we go here to Finwiz, they draw in these trend lines. So we have been kind of consolidating a bit here. Looking at the analyst price targets and comparing it with the current price, they suggest a minus 3.6-ish downside, not really that dramatic. If you look at the more recent developments here, Citigroup does have a bit of a downgrade. But the latest price target from Wolf Research is $265, which is above the current price. But the target price here, the mean target price is below where we are now. Sachs, they do have a number 2 buy. They do have a D value score, B growth, and B momentum. So the industry rank is in the top 17%, which is bullish. And there's a 1.8% dividend, which is also, somewhat bullish. So to sum up my take here on Caterpillar, I think, the theme is interesting. This is, vehicles, but this is not really a theme where we can read too much into it because it's a bit of a mixed theme, and that's why I put it in the bonus theme box. The thing is that based on the history of this stock, we currently have a situation which signals high risk for the bulls. We have seen these hockey stick rallies in Caterpillar before. The prior two ones, they did last longer. That's the bit of a caveat. But when we looked at other, technical signals like, the PPO, we looked at RSI, we looked also at the time cycles, the seasonality, and they do suggest that this could potentially be the peak of the current major and also the small time cycle, which clearly would favor the bears. The analyst price target were leaning in a more bearish direction. Sachs.com is still feeling somewhat of a love for Caterpillar, though they do have a D value score. And you also have, the whole phenomenon with buy the rumors, sell the news, and the major infrastructure spending that's been talked about for such a for a significant amount of time, and we certainly have seen a major rally in the stock. So taking all the evidence together, I think that at this point it makes more sense to look for bearish strategies for Caterpillar than bullish. But always, of course, you do want to have stops in case a thesis doesn't play out.